what's on my 2023 watch list? What do I have on the watch list? And so I've kind of got this in order in terms of what I'm paying attention to, like as the year goes by. Now, I'm not going to stop. Now, I don't have SPY. I don't have QQQ. I don't have the Dow Jones on here. I don't have the Russell 2000, but I don't have that on here because that kind of goes without saying. I'm going to be watching the major indices all year. I'm going to continue to be watching those. So I'm just putting things on the watch list that I feel like are going to be good themes you probably want to pay attention to for 2023. So one is energy, right? So XLE, the S&P 500 energy ETF. I think that we're going to be able to have some good games, again this year because the companies are just so profitable and investors are going to be looking for safety in other areas if growth will not work. There's a possibility that growth might not work again. So if growth doesn't work again, XLE is going to be one you want to have on your watch list and be paying attention to. USO, the United States Oil ETF, pay attention to oil. The price of oil is probably going to go higher in these winter months in the first quarter, first half. So pay attention to US oil. United States natural gas, same thing. Pay attention specifically because, the demand, pretty much the normal demand that we deal with, seasonally, the price goes up seasonally, but also Europe is going to be depending on the United States and depending on China for its liquefied natural gas. So that's going to keep that demand strong, I feel. XLU is the S&P 500 Utilities ETF. XLP, the S&P 500 Consumer Staples ETF. S&P 500 XLV Healthcare ETF. These are defensive sectors. Defensive sectors can work in an environment where growth is not going to be working. So you want to have these on your watch list and see what they're going to be doing at the end of the day. Now, I've got SPDR. SPDR is an acronym that State Street uses. State Street Global Advisors. It's a top three investment management firm in the United States. Now, one that you might not be familiar with, TLT. TLT is the BlackRock 20-year Treasury ETF. Now, why am I watching a Treasury ETF? I feel that 2023 could be a great year for bonds. I'm going to tell you why. So, the Federal Reserve has been raising interest rates. They've been raising interest rates, historic raises in the interest rates in terms of a 12-month period. Now, if we go into a recession, and let's say we go into a significant recession, and let's say when we go into that significant recession, inflation then comes down, employment then goes up, the Federal Reserve is going to have a decision to make. At that point, they've already conquered the inflation problem at that point. So they're going to have to use their tools in order to be able to help give support to the economy. Okay. What does that mean? What that means is that the Fed is probably going to start cutting interest rates. When the Fed starts cutting interest rates, that means that we have inked in pen, we have marked in pen the peak rate for this quantitative tightening cycle, right? That peak interest rate. Now, that peak interest rate is the yield and the return that you get on your money. So if the Fed stops raising interest rates at that point, right, and pretty much interest rates continue to come down, that means that investors have faith in the economy, and they're putting not necessarily faith in the economy, but they want to have safety, right? They want to have safety, and they want to put their money into bonds, right? And what's going to happen is, I feel like the divergence between how stocks and bonds have been correlated in 2022 will diverge in 2023 if we go into a recession. Because if we go into a recession, that means we'll be in a risk-off environment, and investors are going to be trying to price that in. while they're trying to price in that recession by being risk off and selling off stocks, they're going to be going into bonds with very, very high yields, right? Very, very high yields. This could provide an opportunity that you could ride this out for the entire year if we go into a recession and if the Fed cuts interest rates. Those are two big ifs. I would not try to anticipate this happening because you could get hurt doing stuff like that. But you should probably keep it on your watch list, have some levels that you're watching out for potential entries, because I feel that trading TLT to the upside will be very, very good because, like I said before, the 60-40 portfolio, 60% stocks, 40% bonds, the worst year we've had since 1936, right? Do we really feel we're going to have a repeat of that? I don't think so. So I really feel that bonds could be the trade of the year. Like bond returns could be outstanding next year, depending upon how the economy goes. So TLT, BlackRock 20-year Treasury ETF, trade that to the upside. That may be an opportunity if we have the right environment. Continuing on, KWEB, ticker symbol KWEB, that's Crane Shares China Internet ETF. Cure Crane Shares All China ETF, and EEM is an emerging markets ETF. Now, me personally, I don't want to spend this year. I don't want to spend a whole lot of time researching Chinese companies. Nothing against Alibaba, nothing against Tencent, nothing against Baidu, nothing against JD.com, nothing against those companies. It's just like I told you, I already know what my core holdings are, and I really get enough international exposure from my core holdings. I'm specifically talking about China and emerging markets as a trade for next year because the markets have been so depressed. And if China is expecting 4% GDP growth, while the Federal Reserve is expecting the United States to have 0.5% GDP growth, that's going to provide an opportunity if and only if China reopens and ends the zero COVID policy. That is the caveat for China and emerging markets. Now, BlackRock, so ticker symbol IAK, is the BlackRock US Insurance ETF, and KIE is the Spider S&P 500 US Insurance ETF. Pay attention to the insurance companies in that ETF. You're probably going to find a few companies in those ETFs that had positive returns in 2022. These companies are probably going to do pretty well in 2023. They're probably not going to change that much. So I have them on my watch list because they may provide opportunities for me. Now, 2023 watch list continued. I've got Apple. I've got AMD. I've got Tesla. I'm not letting go. I'm not letting go of tech because I'm going to be adding to my positions as the year goes on. I'm going to be adding to my positions because these companies are just, the prices are too good and the fundamentals are just too good not to pay attention to these companies. So, those are my top three in my portfolio I'm paying attention to. Let me introduce some leverage into your life. So ticker symbol SOXL, the 3X leverage semiconductor ETF, TQQQ, the 3 times leveraged NASDAQ ETF. Now, these are some ETFs that have been depressed, that have been beat to sleep. These ETFs are pretty cheap. Last time I looked, I believe SOXL was around $10 to $12. TQQQ was around $18 to $20. So if the S&P does come down to 3,500 or 3,200, that's going to put the ETFs in terms of like where the prices of them in concert with lows that we had in 2018, lows that we had in 2020. So if you can build a position in a 3 times leveraged ETF in a bear market, it's a potential you could buy some of these stocks at like $5 or maybe $10, buy a substantial amount of shares and just ride it and just let it sit. because we probably won't be coming back down to those prices, because eventually we're going to get out of this period. So the 3 times leveraged semiconductor ETF and the 3 times leveraged NASDAQ 100 ETF, I believe you should really truly consider that for your portfolio. Just consider it. I believe it's going to be an opportunity. It's going to go up 3 times as much as these stock prices go up. It's going to go down 3 times as much. But with the volatility comes the opportunity, especially if you can get it at the bottom in a bear market. You will be rewarding yourself in 5 years. I promise you. I promise you, you'll be rewarding yourself. And XLK, XLY, Spider S&P 500 Technology ETF, Spider S&P 500 Consumer Discretionary ETF. These ETFs aren't going anywhere. I'm going to be continuing to watch them for potential opportunities if we come out of this environment. Like, the opportunities are going to be here to really truly make some good investment / trades in these ETFs once we get out of this environment. So this is my watch list. Just keep that in mind for everything that we've got going on.